Hello everyone, I hope you are doing good. Today's video is going to be a very important one. A lot of people requested for this video. In today's video, I will be talking about the Excel sheet where I track all the calendar prices to research whether they are going at a cheaper price or are they expensive. This helps me to make the decision whether I want to enter the double calendar trade or not. I'm sure you will gain a lot of knowledge from this video, and also you can make a similar Excel sheet at your end to do your analysis. Before starting, those who are new to my channel, let me give you a little introduction. I trade double calendar spread almost every week for consistent weekly income. My profit target is 10%. So if you are also interested to make consistent weekly income, do subscribe to my channel. So this is my YouTube channel, Financial Freedom Path. I have made a lot of videos to cover this strategy. Also, there's one playlist. So let me show you. In my playlist tab, you can see this playlist, the double calendar strategy fundamentals. This playlist has a couple of videos which will cover the detail about this strategy in detail. So I highly recommend you check out all the videos in this playlist. It will help you understand my strategy in depth and clear all your questions. If you still have any questions, you can reach out to me. You can put the questions in the comment section below, and I will answer your questions as soon as possible. I'll put the link to this playlist in the description below so you can check out there. Also, I'll put it on top of your screen. So right now you can see on top of your screen. Okay. Also, I have Twitter and Instagram. So this is my Twitter page. You can follow me here or message me here, or also on Instagram. So you can follow me here. You can see I post all my recent trades update on both in Twitter and Instagram. So if you want to get the recent trade updates, you can follow me here. Okay, but don't forget to subscribe to my channel on YouTube. I will keep posting a lot of useful content for you guys. So now let's go to this Excel sheet. This is very busy, so I'll try to go slowly so you don't miss out anything. If you still have any doubts, you can ask me in the question in the comments below. Okay, so in the nutshell, so the sheet currently you are seeing, this is the QQQ sheet. Okay, I have one more sheet, the this one, the research SPY. So here I track down the SPY prices. In today's video, I will cover the QQQ sheet. So in 2023, in 2022, actually I was doing that SPY trades. In 2023, have switched to QQQ. So you can pick whichever the ETF you prefer. Only the thing is the options should have a lot of volume, so then it will be easier for you to get in, get out of the trade. So whichever ETF you prefer, you can pick that. Also, I'll make one detailed video about comparing SPY versus QQQ. Which one is good? In what condition you should can go with SPY? Where in which condition you can go with QQQ? So do subscribe to my channel so you don't miss out all these great content, and also press that notification bell so whenever I post any new videos you get the notification. So now let's get started. So let's concentrate on this first column. So these are the different strike prices. So when I started creating this Excel sheet, QQQ was moving around 290. Okay, so then I go little 50 points up and down, and I write all the strike prices 5 points apart, which these are the different strike prices I might buy in future. It can be anything, just 5 points far, because these 5 points ones are the more volume wise. You can go even 256, 257, like that in the middle ones, but they have little lesser volume, so I prefer the whole number. So basically the 250, 255 multiple of fives, so these has more volume. That's why I rate, I only track these ones. Okay, so these one are all the upper ones, the 250 to 285. These are the put calendars, and the lower ones, this one, these are the call calendars. Basically 290 to 330. The reason is the lower strike prices are out of money if they are puts. So all the puts, lower strike prices will be out of money. Okay, and all the higher strike prices I prefer out of money. So all the calls will be out of money if you go with higher strike prices. Okay, so that is the reason higher strike prices I go with calls, and all the lower strike prices I go with puts to create my calendars. The reason is out of money, and since they are out of money, there will be no risk of early assignment. So that is the reason all my lower calendars are created using puts, and all my higher strike prices calendars are created using calls. Okay, so the lower one, these are the call, oh, sorry, so these, the lower ones are the put calendars. These are the previous date, sorry about that. Okay, okay, so we are back here. Okay, now, as you guys know, call consists of two legs. One is the selling leg and one is the buying leg. So what I will do is, for every Friday I'll pick a pair. So I'll create every pair. So today it is 18th of March. Okay, so I'll go with like 24, 31st March, 7th, 14th, 21st, 20th, all the Friday I'll create pairs. So I currently I'm showing you the 21st and 28th April pair. So I will be selling 21st April and I will be buying 28th April to create this call calendar pair. Okay. So 21st April selling leg. So this will be the credit, and 28th April will be the debit. So 99 is what? So on March 15th at the closing, the put, which was 250 strike price, 21st April expiry was going for 99 cents. Okay. So let me repeat. Put the strike price was 250, expiry was 21st April, that was going for 99 cents. Similarly, 250 strike price put, whose expiry was 28th April, it was going for 125 premium. Okay, and once I take the difference, I'll get the calendar price. Okay, so this will be the debit and this will be the credit, and the difference will be a debit, since this is always the since the 28th April has more days to expiry compared to 21st, this will always be more expensive, the premium will always be more, so this will always be a debit. Okay, so 26 bucks you have to pay to get this 250 strike price put calendar. Similarly, this I will do for all of these using puts, and all this data, these are call prices. Okay, to create the call calendars. So like 295 strike price, 21st April call will be 1260, and 29 295 strike price, 28th April expiry call will be 136 on March of 15. So the difference gave me 108. So 108 was the debit which I will pay to enter this call calendar on March of 15th. So this data was taken on March of 15th. I took this data from Robinhood after the market close. Similarly, I have the data for March 16th, March 15th, 17th. Every day after market close, I take the data. Similarly, tomorrow, like sorry, on Monday, I'll have this data for March 19th. So every day I'll take this data and I'll put it here. So like that, I'll have for every day. So it is going previously also, like March 14, March, but March 13 I was busy, so I was not able to fill the, but March 10th, like that. So I will, put the data every day after the closing. So this is how all the calendar prices I will get. Now I will enter either double calendar or triple calendar. So to enter into a double or triple calendar, I will first choose the strike prices. Let's say I have chosen 270 and 310, like these two. Okay. So now what I have to do is, I will have chosen this 270 and 310. So now I have to add the premium of these two. So 53 and 95. So I have to add this. So this will give me, okay, this is the total double calendar price. To make my life simpler, I have introduced this B column. Here you have to just write how many calendars you want to buy for that strike. So all are zero, which means you are not buying anything. So if I'll put one here, so basically I'm buying this strike price calendar. Okay, so the total of them will come here, 53. So if I'm buying one of 53, it will come here. If I'm buying 10 of them, then 53 into 10 will be 530. So it is coming 530. So like that you can enter. So I want to buy this. Let's say I want to make it a double calendar. I want to buy this. I want to buy 290 also to make it a triple calendar. So this will give me the total price, how much I will be paying for this trade. Okay, so basically it is just adding these. And if it is 1 1, if you can even put 2 10 whatever you want, and it will give you total here how much debit you will pay. Okay, so like that way you will get the price on March 4th, sorry, March 15th at closing, this triple calendar, which was 270, 290 and 310 strike prices 3 calendars was costing me $250. Okay, this was March 15th. Now on March 16th, the total was 242. March 17th, it was 257. So like that, it will give you the totals. Okay. Now in this, you can put whatever price you entered. Let's say I entered on March 15th, somewhere in the day when it was going for, let's say, 260. So, okay. So I will put 260. So I'll put, okay, I entered in this on March 15th during the day, and that time it was going 260. So I have put it here. So now it will calculate what was the profit. So basically it will get difference between this, and it will calculate, okay, you are in 2.3% loss. Here in this day you are in 6.92% loss. Here you are lost at 1.15. So whatever number you will put, it will put the difference, and percentage it will tell you. So it will automatically do all the calculation, and you have to just put which calendar you want to have, buy, and all the analysis you can do it like this. Okay. So now once you have this, now you can even compare different days pair wise. So this was 21st and 20th. Now let me give you a little more. So this, I have one more, which is 14th or 21st April. So I told you, right, every pair I have picked 24 to 31st, then 7. So let me go up till where I have this data. So today, yeah, like 17th of March, after what options I have is all the Friday ones. So 24th, 31st, 7th, like that. So I have this pair 24 and 31st. This is the first pair I will have. Then 31st and 6th. Okay, so I'll go 24th and 31st, then 31st and 7th. 7th was on holiday, so that's why it is 6th. Okay, so 31st and 6th. Now 7 days again, 6th and 14th. So like that. So basically every pair I'm putting 6th and 14th, now 14th and 21st, and 21st and 28th. So like this, what happens is it helps me to understand which pair I should go for, 2 week, 3 week. So I have all the data in advance, every data, all the data which I will need to enter any trade, I'll have it here. So it is very, detailed Excel sheet, all the data I have. So now let me take one example. Yesterday I posted one this thing that I'm not entering double candle this week. The reason is they are pretty expensive. They went up by 31% in 3 days. So basically, I was in this just one calendar. So this was just dummy. I just enter one just to in Robinhood. I don't have to open again and check what is the price going on. So I'll buy one optional calendars, and I'll see what is how it is going. And within 3 days, I was just tracking down, and it became up by 31%. So I didn't take the main entry. So I'll show you how I did the analysis here. Okay, so this uh, tweet I made yesterday, which was 17th of March. So basically I was looking to enter into this rate anywhere between 13 to 17, right? So now I'll, as you guys know, I will go 3 weeks far. So 3 weeks will be what? 1, 2, 3. So 7th of April expiry, and 4th, since 7th is a holiday. So 6th of April expiry will be my selling leg, and 14th of April will be my buying leg. So 1 week far, and 3 days, 3 weeks to expiry. So 6th and 14th pair. So here I will go. Where is the 6th and 14th pair? So here it is. 6th and 14th pair I am looking for. Okay. So this is the pair I am looking for. Correct. So now what I will do is I will go and look what is the price going on. Okay. So you can see the, let's say I have 275 and 315 strike prices calendar. So that day they were going for 199. If I go backwards, it was 175, and before that it was 150. So you can see they were pretty expensive. Now let's say if I'm entering on March 17th, my strike prices will be little different, since it is going at 305. So let me calculate what is the first straddle price. As per 305, what will be my strike prices? So 305, the at the money, this is the call, right? So at the money call is going for 8 points. Similarly, put was also around this point. So 8 and 8 will be 16. So at the money straddle will be 16 points. Got it? So basically, this is what I go first. I'm trying to let me repeat again. Okay. So first of all, I am trying to calculate the straddle price. So 6th of April expiry. What is at the money call premium? 803, correct? Here. So 305 is the at the money. So 305 was 803. Same 803. And put was also, I don't have that put premium right now here because I have put only till here, but it will be similar, like somewhat near about that 7 or 8 or 9, I remember this. Okay, so if I will add them together, it will be 15 points, like 16 points. Okay, so 8 and 8, 16 points. So 16 points is 16 is the straddle price, and just to give extra margin I will make it as 20. Okay, so I'll place my calendars 20 points far. Okay, so 305 is my virtual middle calendar, so 305 plus 20 will be 325, so I'll put 1 here and I'll make this 0. Okay, so this is my upper calendar. Okay, 305 plus 20, and 305 minus 20 will be 285, so I'll put 1 here and 0 here. Okay, so this is how I will do the analysis. So on March 17th, when I'm entering, I'll do what is the straddle price. I'll get okay, this is straddle price is 16, call is 8, and put is also somewhere, let's say 8, so add them together, so it is 16. So 16 points far, but just to keep extra cushion, I make it to 20 points far. So 305 is the middle, so 5 points below, 20 points below will be 285, and 20 points up will be 325. So this is my double calendar spread, where 285 is my put calendar. So all my upper one, these the lower strikes are puts, and all these upper ones are the calls. So 285 strike price put calendar, and 325 is the call calendar. So I will add the premium. So if you manually add it, so 96 and 77, so basically 96 and 77, if you add here also, you can see it is 173, and here also I'm getting 173. So 173 was the premium on March 17th. Now I'll go back. So on March 16th, how much was the premium? 149. Let's go back. March 15th, it was 129. On March 14th, it was 127. On March 13th, it was 114. March end, it was 116. So now you can see currently it is going for 173, and previously it was going for just 127 or 114. It was this less, so that is the reason it is so expensive. However, there's one catch. Right now we have calculated these strike prices based on this 305, so we'll make sure whether if we would have entered on this date on March 13, where we are seeing lesser price, whether if we would have entered this strike price as per the 290. Currently we chose as per 305, so if we would have chosen as per 290, what would be profit today? Okay, so we'll go both ways to make double sure whether the calendars are going expensive or not. So now 290, I'll do the same calculation again. So 290 is, let's say, is my that day on March 13, 290 was the middle calendar. And again I'll first calculate what is the at the money straddle price. So again, so that day the 290 was the at the money, so 290 call was 940, and so I'll just double it. So call and put together will be lump sum, like 20 points. 940 will be 1880, which is like lump sum. Let's say extra cushion I will add. I will make, instead of 20, I will make it 25. So 290 is my middle calendar, which I'm not buying. I go with so just double calendar at the start. So I'll make this 0, and 290 minus 25 will be 265. So I'll add 1 here. So I'm buying one calendar here, and 290 plus 25 will be 315. So I'll add 1 here, and I can remove this. So if I would have entered on March 13th, I would have gone with the 290 is the middle. So based on that, I will go with 900, 940 is the premium for one call. So if I will add put, it will be lump sum 18 or 19 points. To extra room, I will make it as 25. So 290 minus 25, 265, and 290 plus 25 will be 350. So this is my double calendar. So the premium is 121. Now I'll write this here 1.21. Okay, so here I will write whatever end price I'm entering. So I write written, okay, 121 is my entry point. Okay, now let's see. So that day 121 is coming here. Okay, right, this is interesting. I don't know why this is not 0. 121 minus 121 is 0. Anyway, so March 14th, you can see the premium went up to 124. Here it will show you what is the difference. So 124 minus 121, 3 cents are your profit, and in percentage wise it will calculate 2.48 percentage profit. On March 15th, your premium instead of 121 it became 1.36. So your the premium went up by 15 points, which is 0.15 points, which is 12% profit. Okay, so like that you can do. Now March 16th, the premium of these two calendars would have become 156, so your profit is 35 cents, which is 28% profit. On March 17th, the premium is 174, which is 153 cents profit, which is 43% profit. So now you can see this is a lot, like 43 is here. Actually, when I entered this dummy, like single trade, the strikes I entered on March 14th actually. So I calculated based on this, and my will be was 275 and 315. Yeah. So based on that, so I entered around 143. I remember. So I entered 1.43 was my entry. So based on that, I was saying okay 10 10, and see here by closing it went up to 39%. When I posted this trade, it was up by 31%, and by end of the day it became 39%. So now you can see it is so expensive. So like that, I will track down whether they are very expensive or not, and then I will make the decision whether I should enter or not. One more thing, expensive doesn't mean it will give you loss. Did you get my point? Today Tesla is expensive doesn't mean it might can't go up more. Only the risk goes up. So even you can enter this trade by putting 199. Okay, only the thing is risk will be more. It There are good chances QQQ will fall, and because of fall, the this 315, which is right now 134, this will come down drastically and you will get into losses. But if QQQ keeps on rising up, then this will keep give you more profits. Got it? If VIX doesn't fall like that, all these things. So it is not the case that if it is expensive, then don't buy it. Only the thing is, let me show you how I do my thing. So here you can see 138, 138, 138, 138. Oh my god, how it is one so. But it will toggle around sometimes. Then I will feel okay. This has saturated. Like here, you can see 138, then 130, then 143. Then I will see when I'm here 138. I will see for last 2 days. Okay, it was going for 138. I don't know why exactly it is 138, but it will toggle on. Let's say 138, 149, 139, 140, and suddenly I'll see 130. Oh, today, then I'll see okay, today it is very cheap. So on March 10th, I will enter the trade because it is very cheap, and I will do the recalculation based on this date. I will do readjustment because I am entering on this date, so I'll adjust the strike prices. So based on that strike price, I'll enter okay, 130 is the cheapest one. Okay, so now let's do the analysis. Let's say we are on March 10th. Okay, so now let's do the analysis. So it is at 288. So 288. So middle will be, let's say, 285. So then the premium is 688 for the put, and 688 double, basically straddle price call plus put together. So it will be lump sum 688 double will be somewhere around 14 points. I will add extra room and I will make it as 20. So 285 minus 20 will be 265. So I would have entered at this price, and 285 plus will be 305. Okay, so like that I will do. Now it is 310 was 153, so I will write my entry as, let's say I entered at 153. First of all, I will check previously what was the price going on. So 150, 150, 149, 154, 153. So 153 seems fine. Okay, so I'll enter. It is not expensive, it is not cheap also. Like I would have preferred 149 like that, but it has also went to 154, 153. It is okay price. Okay, it is neither cheap nor very expensive. If it would have been 160, then I will not enter, because if I could have entered 149, why to enter at 160 or 165 like that. But few three 2 3 cents up and down will keep on happening. So I'll enter at 153. Okay, now next days, okay, March 13, 163, 168. Now it has become expensive. Actually, it has already given me profit, 9.8% profit. Okay, here basically I will exit March 15th. It was 12% profit, so I'll exit. So like that, I will do the analysis. And sometimes what will happen, it will go down also. So if it goes down, I will buy more. No, but it is not necessary. If you want, you can average down. If you don't, you can stay till it you see the profits like 12%, 15%, 24%, and if you need it you can even buy the middle calendar, so like that. So here, let's say here, instead if I'm seeing 24%, okay, and we have already reached upper calendar 305, okay. Now let's say if it was not 24%, let's say it was 6% profit, and my target is 10%, then what I will do is I'll wait to close above it. If it closes above, then I'll buy one more calendar here. You know, then I'll do the analysis here. Okay, 305, it is going for 8 points. So 8 points, I'll go what, let's say the little double. So I'll maybe make it 10 or 15 points. So I'll buy, let's say 320 point. So I'll buy one more calendar at 108. It should close above it. Basically, actually, it happened 306. So like here, so I would have bought 325 like here also. So I would have bought at not 325, sorry, 20, 10. How much was 305, right? 305, okay, yeah, it was closing at 8, 8, 8, and 16. So 16 will be 320, okay. So I would have bought this calendar at 1 point also. So now I will make this also 1, okay, like that. So I have bought at 1. Now next date became 108. So may probably this I would have got into profit. If not, like that, I will do adjustment also. So this is how it helps me to track down the prices. This is one thing. One more thing, I have a lot of data previously also. So this was the pair which were available I showed you. But there were few pairs like this pair which expired yesterday only, because 17th of March pair expired, right? So a lot of data which have already expired. So these data you can see. So I have a lot of expired data also, which I was tracking. So like the February 17th, February 24th. So I have a lot of data. So it helps me to do the analysis, back analysis. Let's say Apple earning comes every quarter, okay. So this Apple earning is coming, because of that QQQ will move violently like that, okay. So what I will do is I will go back and see how the at QQQ earning in, let's say, January it came. Again it will come in April, right? April the end, the Apple earning will come. Similarly, last quarter one also January, the earning came for quarter four in January. So I'll go that day where it was like that news came and how the calendar performed. So what I'm saying is, if I have to do any analysis like that, so I can go back and see how it was performing. There I can change the data. Okay, if I would have entered this, what happened just before earning, how it performed after earning, like that I can do back, how it performed that time. So how this news did it that time. So based on that I can do more analysis. So this data helps me in that sense also. So it has a lot of helpful features, to go back, track your strategies. You can do a lot of analysis on this, and I do a lot of analysis, and based on that I take trades. So this is a very helpful Excel sheet. It gives me a lot of insight, whether I should enter, what should be my strategy, which pair should I pick, 16, 8, 14, 14, 7, 21, like 7 days far, 14 days far, 21 days far, how far should I go. All this analysis I do. So let's say I put all the strikes same, and I will see, okay, this is 30%, this is 24%, this is 56%, okay, so this has more room to grow. Like all the analysis I will do. If I so this light blue color is for like a holiday. So basically this is not 7 day far, because I told you now this is 6 day fast only. The 7th of April was for holiday, so this has one more less day. So I have color coding also. This is 1 day less I have, so this should be cheaper. So all the color coding I do. So if I have to understand whenever there's 1 day less how it performs, so I'll go back and see if there's any other which has blue, light blue color. So I'll go there and see how it performs. Then I'll do the analysis here also. Okay, it might perform similar way. So like all this helps a lot, to understand and do the analysis. So that's it about this Excel sheet. It is a very important tool, and it gives me a lot of you know features. It gives me a lot of help to do any analysis if I have to do, if any earnings is coming, if the rate hike is coming. Let's say the result is going to come, CPI number is going to come, how it performed previously. Then I'll go to that month how it performed, and then I'll see, okay, it performed that way. When the VIX crashed, when the VIX went up, all these things I will do the analysis there, and then I'll get into trade. Okay, that time it was better. Let's say when CPI number comes, it is better to give extra margin. So instead of 20 day 1 days, you should go for 28 days, or you should go for lesser days. So all these things helps. So that is the main motive of this Excel sheet. It helps me a lot to do all analysis, and I have to just enter the, like, just move these numbers, so it have to go like this, and I'm able to do it. So anyway, so it helped me a lot, so I hope you also learned a lot from this thing. So same thing I have for SPY also, and here QQQ, and I even cross compare between QQQ and SPY. So all this helps me a lot, and I hope you learned a lot from this video. Now let me do one more thing, which is the giveaway. So let's do that. So let me go to the last video. If you haven't subscribed, do subscribe. Don't forget to do that. Let me copy the link to this video, the last video. So I always have this giveaway. What I will do is, you have to comment and put the keyword session. If you won't put the keyword session, I won't pick you in this giveaway. In this giveaway, you will get opportunity to talk to me on one-to-one basis. So make sure you comment and put the session, and I'll always, in the last video, whichever is the latest video, I'll pick that video, and then I will randomly pick one winner here. So I'll put the session also here. Where's this specific test? Yeah. So you have to put the keyword session. The case doesn't matter. You can put in uppercase or lowercase. Don't forget to put session. So this is the video. Let me do this 8 and then get the YouTube comments. And now let me do the raffle. Okay, so Nishant is the winner. So Nishant, you can reach me on Instagram or Twitter and message me there. So we'll have one-to-one session with you. I will give you chance to talk to me. You can ask your questions, feedback, anything you have. So we will plan this one-to-one. Okay. So congratulations, Nishant, once again. And if other people, those who are not able to get the get picked this time, you can always put your comments in my today's video. In the down, put your comment, like put whatever question or feedback you have, and don't forget to put the keyword session. Okay. If you put the keyword session, then only I'll pick in this, this raffle will pick only that. I don't want to mix with other people, those who don't want to participate. So don't forget to put the keyword session. So in the next video, whenever I make, I'll pick, give you chance to participate in this giveaway. And if you are lucky, you will get the chance again to talk to me to on one-to-one basis. So today's winner is Nishant. So Nishant, contact me on Instagram or Twitter, whichever you prefer, and we will schedule a one-to-one session with you. Okay. Congratulations. So I'll end the video. So please subscribe to my channel if you are finding any value in this, and I'll keep generating great content for you guys. Thank you. One disclaimer: all the information on this channel is for your knowledge purpose. Please do your own research before you place any trade. All the information given here on this channel is for information purpose only and entertainment purpose only. Thank you. See you in the next video.